Welcome, everybody, to Wall Street Reporter's next Superstock live stream, March 25th, 2021. We are back with NG Energy, GASX on the CSE venture. Serafino Iacono, CEO of the company. Serafino, welcome back.
Well, thank you for having us again.
Serafino, you have some very exciting news that just recently came out. You got the resource estimates. We're going to dive into all of that. One of the things that we focus on, or actually not one of the things, the thing that we focus on with our live stream platform is to bring investors those stocks which have that 10x to 100x upside. So companies we going after either massive market opportunities, they have major new discoveries, things like that, which can really have a dramatic impact on stock prices. So I want you to explain to our audience what is so compelling about what you're doing, with natural gas in Colombia. Why should investors be excited about this? Because a lot of our audience, especially the Americans, they don't know where Colombia is. So give us the big picture.
No problem. Thank you. Look, it's the compelling story over here is threefold. First of all, you have a company that when I picked it up had a $4 million market cap. It had some concessions, no development. We took the company from a $3 million market cap to a $150 million market cap. So that's been in the last 2 years. How do we do that? The compelling story, it's the second part of the story. We have fantastic assets in a country that has a shortage of natural gas, and it's a country of almost 50 million people that need to grow. And the consumption of natural gas is twice as much as the production of natural gas, which makes natural gas being a very expensive situation for you to develop, and makes it very costly. So we are a company that has a very big potential in creating huge revenues that will bring in rewards to our investors in very big numbers. Just to give you an idea, natural gas in Colombia sells for $2.30 to $2.50 per million BTUs. In Colombia, we sell the same natural gas between $5.08 to $7 per million BTUs. Our lifting cost in Colombia, it's 25 cents per million BTUs. And
it's a big profit opportunity, basically.
It's huge. When on oil you make $5 and $10 a barrel, equivalent barrel of oil to gas, to natural gas, because at the end it becomes equivalent, you're making $30, not $5 or $10. So it's a bigger reward. It's less risky. And it's something that these days has become a very big thing because it's green. The greenest thing that you can get in natural gas, it's natural gas right now. Everybody's talking about electric cars and everybody's talking about electric.
This is the thing. You need, to generate that electricity, they're going to need natural gas to generate the electricity for the electric cars, all that stuff. For the iPhone.
You have three things that you're going to be using in the world. Look. I'm going to give, maybe for your audience, it's very good to understand because everybody's talking green right now. I agree that we have to go green. But everybody's talking about going green in cars and going green in computers and going green in everything. Solar it's a 33% efficiency. The maximum the solar is going to go, it's 44% efficiency. That is the molecule that comes from the sun. The most that you have under these days, it's 44% efficiency. We're almost there. Wind, it's 60% efficiency. We're 45, 46% efficiency of wind already with the technology that we have. That doesn't solve, and even with this efficiency, it's only 3% of the energy that is used in the world.
They can't scale with, with alternative energy.
Look, 100 megawatts of electricity, which is to light a town of 40,000 people, maybe 50,000 people, 100 mega, all right, would need 40 square kilometers of solar power to make the electricity that it needs. And it can make it only in the daytime, because at night you will need battery and you will need a huge storage facility. So reality is you're going to have three choices that you're going to use as energy to make that green: nuclear, hydro, or natural gas if you want to make it clean. And then comes coal, and then comes diesel. So natural gas is becoming the premier transitional energy maker that is going to be what's going to change the world. So we're betting on that. And you already see it in a country like Colombia that is importing natural gas into the country from the United States. And by the time it leaves the US at $3 per million BTUs, it's $12 per million BTUs in Colombia. So this is the great thing. We have assets that with major discoveries of natural gas. So maybe we go and talk a little bit about the projects and what makes it. That's
Okay.
the third step.
Should I pop up the slide on the screen just while you're talking, so people can kind of get an idea of the assets? Okay.
All right.
So, I think what we should do also, might as well address the report, the resource report that came out last week. The market was excited about that. So why don't we talk about, why don't you kind of go through the report while we have the slide up on the screen?
It gives you an idea of how sometimes the markets work. We've been very conservatively talking to our audience and our shareholders saying, look, we have three projects: Maria Conchita, Sinu 9, Tiburon. Tiburon is much more greenfield expansion, very, very big potential of natural gas, 3 to 4 BCFs of natural gas. Maria Conchita is our near production. In the next 2 months, we're going to put Maria Conchita into production. That's going to start generating cash flow in this company at the tune of $35 million a year in revenues.
Okay, so this is near term. This is basically, we're talking about by May.
No, this is tomorrow. This is literally, we're building the pipeline. Okay. And this week we're drilling our second well, which I will talk about. So Maria Conchita, when we started, we said it's got 35 BCFs, billion cubic feet of gas, in proven. And potentially, we said it's got 80 to 90 million BCFs of gas, billion cubic feet of gas. The exchange came over, and then we went to Sinu 9, and we said, and Sinu 9, which is our big baby, is a monster that we believe has between 700 and a TCF of gas. The exchange came over and said, look, under 51-101 rules, which we respect, and it's the right thing to do, you cannot say that until you do a 51-101. So please do a 51-101, and then you can say that you got the 200, the 100 million BTUs of, or billion cubic feet of gas, or you got the 1 TCF of gas. Well, the report was done, we filed it, and what came out is that we were being very conservative, as we usually are, and what came out that Maria Conchita has between 1 and 1.75 TCFs of gas, and Sinu 9, and Maria Conchita doesn't have one, it has 2 billion cubic feet of gas. So what does it mean? We doubled our potential now certified by the exchange, which makes this project even more attractive, because instead of having a 10-year life of a field, it's got 20 years, 15 years.
So this is I mean, this is like a game changer, basically. I mean, so in theory, Serafino, so in theory, should the stock be worth double what it was, 2 weeks ago?
I urge your audience to look at a company called Canacol Resources, which is our neighbor in Sinu 9. Canacol's got I think it's $800 million market cap. It's a fantastic company run by a very smart guy. He's done a great job. He was one of the guys that actually started looking at the idea of going into natural gas and divesting from oil because he was seeing what was happening. But it's got an $800 million market cap. It's a company that's got an enterprise value because it built a lot of infrastructure, probably 1.5 billion with the debt that they have in value. But it's a company that does $300 million in revenues every year, 300 or 350, I think it is. That is the model that you got to look at us becoming in the next 2 years. Why? Because in Maria Conchita, we drilled the first well, which is going to give us 20 million cubic feet of gas a day in production. Sunday, we spud our second well, which is Istanbul. Istanbul, we are projecting 3 to 4, possibly 5 million cubic feet of gas a day. If it's that, or it might be bigger. But regardless, if you look at 25 million to 30 million cubic feet of gas a day, you're talking about $50 million in EBITDA in the company starting 2022. That's tomorrow. We're going to start drilling this week, the second well. We're building the infrastructure, which is fully financed to build a pipeline to connect to the main distribution line so that we can start selling our gas. We already have a market done, a 508 per million BTUs. We can sell our gas, and possibly the second gas that we take out of the Istanbul, it's going to be sold between $5.50 and $6. So an average of $5.50 per million BTUs, a cost of operation of $1.55 or $1.50 when you want to look at it, and a net profit of $3.50 before taxes and royalties. So that's big money.
Okay, so this is very compelling. So wait, so right now, what's the market cap of the company? How many the shares out? What's the?
We got 90. We got 100 million shares out, and we have about $135 million market cap. But again, compare it 2 years from now, where we're going to be the size of Canacol in delivering gas, more or less at the same amount. They do 200 million cubic feet of gas a day. Between Maria Conchita and Sinu 9, 2 years from now, we should be in the same range.
And so basically, what, 300 million annual revenues?
I think it's 350 that they do.
350
or 350 or possibly 400.
Okay, so basically, so you're saying so Canacol is essentially the same. It's a direct comp.
It's our next door neighbor. It's going to be the same kind of company.
Same exact. Okay, same exact thing. Okay, so it's very okay. So that actually makes it a very easy story for investors to understand. Just look at this Canacol. What's the symbol on Canacol?
I apologize. I don't know the symbol.
We'll look it up. But anyway, so basically same idea. Except they're getting in here at at 100, basically at an eighth of the price.
You're getting, look, if you would have believed our story a year ago, our stock was trading at 35 cents. Before that, it was trading at 10 cents a share when I picked up the company 2 years ago. Today, the company trades at $1.40, $1.50 a share. And the best part that we have as a company, we got zero debt. Our project in Maria Conchita, it's financed, and it's going to be self-financed by cash flow. In Sinu 9, the first 5 wells are fully financed by a company that is taking the risk, because the risk is minimum for them to build the facility and to do the project. So we got our first 5 wells, that's $25 million worth of investment, guaranteed that they're going to finance it for us. So we have zero risk on that. And in September of this year, we're probably going to drill our first well in Sino 9. And once we drill our first well in Sino 9, and we believe that it's going to be between 30 and 50 million cubic feet of gas a day, just think about it. We are right now projecting out of 20 million cubic feet of gas a day, $35 million in EBITDA a year. 50 million, it's twice, it's 2.5 times that production just out of one well in Sino 9. That means that our EBITDA will go to $100 million. And then take a company like us and you put a multiple of 5 to 7, and that's where you get your numbers.
Okay. And Serafino, and I think you mentioned last time we did the live stream that your plan is, again, because it's a cash flow business, so essentially there's going to be a
dividend paying company, because
okay.
It's going to be making, and the great advantage that we have, that the way we organize this company, because we don't have to build the infrastructure, for example, that other companies had to build. We are right next to, God is giving us a great gift. We are 14 kilometers from the major pipeline that goes south, 25 kilometers to the pipeline that delivers to the 3 major cities in the north of Colombia. And we are in Sino 9, we are right next to the Canacol project that already has spent millions of dollars in infrastructure, and we have to build a pipeline that is 25 kilometers to hook up either to the north or to the south to deliver natural gas to 3 of the major cities in Colombia. And they all need natural gas.
Okay, so let's jump into some audience questions.
When can we expect dividends in Q4 2000? Yes, the idea is by Q4 2022, this company is going to have all of this program financed, and then this company, and I am aligned to shareholders. I'm the second largest shareholder in the country. I mean, in the company. So to me, I want to pay dividend to our shareholders.
Okay, so Q4 2022. So this is 18 months from now. Okay, this is a good question. Actually, I was going to ask you a variation of this. So, so Dino is asking if this happens, what would be the stock price in your opinion? Actually, and I want to ask my version of the question, which is, what do you feel? Again, just your opinion. What do you feel the stock is worth right now?
I think our stock is worth right now should be worth somewhere around $3 to $4 a share.
Right now.
Right now.
Bottom line, okay.
With what we have and the potential that we have, and take it for resource of what we have in resource. And it's got the right question. What do you pay as a company? The way I will look at it, what do you pay per million BTUs of natural gas in the ground as a company? So if you're going to be selling it for $5 per million BTUs, so, and I have 200 million in one concession, and I have $1 billion in the other, take out what I will pay in the ground on oil or what I will pay in the ground per gas. Gas is somewhere between 25 cents and 50 cents per million BTUs. Take 25 cents and 50 cents per million BTUs and multiply it by the production that you have every single day, which is 20 million in Maria Conchita, and so on. You just take your reserve calculation of 1.5 TCFs of gas and put a price of 25 cents per million BTUs. And that gives you the number. And I believe that this company should be a $500 million company right now as we speak, with the reserves that it has.
Okay. So for you, I think one thing you should add again for anybody that might be new is you've done you've done this before. I mean, talk about a little bit about your track record, kind of in the energy field in Latin America. You've had some massive
Well,
wins,
look,
at least from a stock perspective, 100x win. So
the company that my people are all oil people. We built probably what was the largest oil company privately owned in Latin America, which was Pacific Rubiales Energy. Pacific Rubiales was a company that when I was involved, we started with $35 million investment, mostly my money and some of my partners' money. We took it to a $14 billion company. The company, at the end of its life, got into trouble because it got heavy into debt for growing. And number two, the price of oil went from $150 to $25 a barrel. But still, the company got rescued, and today it's called, I think it's called Frontera Energy. And Frontera Energy, it's a $600 million company.
but the stock, what happened to the stock? Just give us the stock.
Well, the stock
price
under our administration went from 35 cents to $29 a share.
Oh, so it's
over
not
5 years.
96x.
Yeah.
96.
It was one of the most successful stocks, and anybody that was a U.S. investor, Canadian investor, in the first 10 years of the company, believe me, not only did it make a lot of money, we also paid $7 billion over 5 years in dividend in that company.
That's real cash.
Yeah. So investors did really, really well in that company. We created a smaller company. Our company is a company now that is lean and mean. And this is very important because you have to learn lessons also from your past. We were a company with 40,000 employees at one point. Okay,
Wow.
40,000 employees.
Okay.
We learned a lesson in life that being lean and mean is good. Our G&A in this company is $1 million a year. We keep it to the minimum. Why? Because we want to spend our money. We want to spend our money where you're supposed to spend your money, which is in the ground. So we have 7 people that run our company. Anybody else that works for our company is people that we hire to do a specific job. I'll pay you. See you later. Next time that I need you, I'll come and get you. And we are a company that decided that we are not going to load ourselves with debt. Debt, to me, is a terrible thing. Once you start making money and you start making cash, you build your company with your own cash, and the excess cash, you pay a dividend. That's the way it should be.
Okay, makes sense. I think in the energy business, right? It's very you get a lot of ups and downs. The debt is that fixed cost is sometimes hard to.
But it's a good thing for the audience to know. If you look at the historical price of natural gas in the last 14 years in Colombia, it's between $4 and $9 per million BTUs. We are right now
at the bottom of the range.
On the bottom of the range, going up because they're starting to now import natural gas. And the delta between the gas that is imported in Colombia, that it's between $9 and $12 per million BTUs, and the local gas that goes between $5 and $7, it's starting to catch up. And the number is going to be somewhere between the $12 and the $7. So it's going to be somewhere around $7, $8 per million BTUs. That's what natural gas.
So are you locked into? You mentioned the $5 range. Are those short-term contracts?
I only locked up for the first well.
Okay.
For 4 years,
okay.
I have a lockup.
Okay.
And the reason is because that well cost us $3.5 million to develop it. I amortize it in the first 4 months of operation. The rest, it's free.
It's a good deal. Okay. What about you, Serafino? You want to talk about, before we wrap up, you want to talk about some of the blue sky projects that you have?
The blue sky in this thing is all the CNO 9. CNO 9, I don't think it's going to stop at 1.5 TCF of gas. It's a huge concession. It's got conventional gas. It's got non-conventional gas in the south, and it's got oil in the northwest of the concession. So there is a lot of growing upside, but the biggest that we have on our portfolio is Tiburon. Tiburon sits surrounded by three of the major projects in Colombia. It's in the tip of the Guajira. Tiburon sits surrounded by a project called Orca that you see over there, Orca 1, 8 TCF of gas. Ballena, that is right next to Maria Conchita. And Ballena has been producing for the last 50 years 60% of the gas that Colombia uses, that it's close to 500 million cubic feet of gas a day. And Perla, which is the largest discovery of natural gas in the Caribbean. It's on the Venezuelan side, owned by Repsol. It's 17 TCFs of gas, 17 trillion cubic feet of gas. That is enough gas for you to give a city like Miami electricity for the next 100 years.
Wow, that's a good. It's a lot of electricity. That's a lot of electric power for Tesla cars or whatever else people are going
to. Well, everybody's talking about that they want to go electric. Nobody has told me where the electricity is going to come from. It's got to come from someplace, and that's what I said. Nuclear, hydro, and natural gas. Those are the three closest things. You don't want a nuclear power plant right next to your house. Nobody wants it. So it's going to be a while before they start building nuclear power plants. Natural gas is going to be the winner of this thing.
Okay. Serafino, let's wrap up in terms of what else can we expect in terms of news flow, like, and how often should investors expect to see news releases? Because, you know, a lot of
watch next week news release of our drilling in Istanbul well. Istanbul well is going to be drilled, and we're going to be announcing our success within the next 2 weeks. We're going to test it for 15 days, as you got to test it, and then we're going to be announcing it. And then after that, it's going to be the hookup in the next 3 months. It's going to be the hookup of the natural gas, commercialization of the natural gas. That's a big event because it creates cash flow. And after that, it's going to be CNO 9 somewhere in the summer.
Okay, so there's a string of catalysts potentially for the stock.
Lots of them. Lots of them.
Okay. Serafino, to wrap up, you know, last question, our favorite, which we ask is, you know, in your opinion, top 3 reasons for investors to consider GASX shares today.
The most compelling reason is organic growth in the concessions. So big growth potential, cash flow. It's the other catalyst. And the third most important to me is a company with almost no debt or zero debt. We don't have any debt, and it's a company that is going to be a big producer in a country that's got big growth in natural gas usage, and very little risk. Colombia is a BBB plus rated by Fitch and by Moody as one of the safest countries to invest in Latin America.
Okay. Serafino, on that note, I want to thank you. I guess everybody in our audience is looking forward to next week's news flow.
We will be happy to come and talk to you about it. Thank you very much, and great seeing you again.
Fantastic. Thank you, Serafino.
Take care.